Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and I want to welcome you to my 100th episode here with Markets.com. It's the 100th episode of Markets Talk, and look, I hope so far you have been enjoying those. Look, we're going to talk markets, and what better way to celebrate is with the finally getting the US CPIs, right? So look, about all this and a little bit more in the webinar right now. So like I said, hopefully you'll enjoy it, and yeah, I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today, ladies and gentlemen, is the 24th of October, 2025. So yes, welcome everyone. Welcome to this 100th, the episode number 100 of Markets Talk. Look, I hope in general you had a great week so far. I hope everything is running smoothly. I hope, no major issues there. The markets, of course, are interesting. Finally, we're seeing gold kind of getting to some senses. We're also expecting the US CPIs to come out as well. So we're seeing this war of tariffs, and well, not only tariffs, unfortunately, but look, about most of this right now in this session, we're gonna have a look at the markets. We'll have a look at some data, but before we do that, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to do my usual good morning in the chat room. Good morning, everyone. So yes, basically, as you all know, this session is made for everyone who just wants to grab a cup of coffee, maybe some tea, or maybe just some water, and just chill and relax and kind of go through the markets with me, go through some charts. The most important, set up, prepare yourselves for the day, find maybe some interesting setups or something like that, and kind of, and also ask questions, because look, this is a live session, this is an interactive session, so feel free to drop your comments in the chat in there. Okay, look, also just before we jump into the charts, quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And also look, I have this webinar coming up next week. You need to register for that one. There was an issue with the registration link initially, but I think it got fixed now. So, well, these things happen. But anyway, now you can, like I said, you can put your name in there, your details, and you can register. And basically on the 30th of October, I'm going to be talking about Bollinger Bands. This is going to be the third episode in the series, which I recently started, where I'm picking up on the top indicators and kind of looking at those and just and then placing some live trades on our demo account in order to see if those indicators actually are any good, if they work, if they help us maybe in entering trades. So this is what we're going to do. The first two sessions which we had were great. I think that the viewers loved it, and we had really great interaction. So yeah, join in. Hopefully you'll like it. So, ladies and gentlemen, without further ado, I'm celebrating, like I said, this 100th episode of Markets Talk here. So, let's have a look. Like I said, we have a very interesting day today, but first, the data that came out already. We had some data from Australia and Japan. Look, first of all, Australia. Now, let me just refresh the page here. Look, Australia, S&P Global Composite Manufacturing and Services PMI, the flash numbers came out, and well, look, the expectation, there were no expectations, but the thing is that the manufacturing side did drop. It did fall below the 50 zone. Basically now is like in contraction. So that's of course not good. Certainly the composite and services remain still okay. The services actually even grew, but this is not the final number. This is the flash, so this is the expectation. So we will get the final number later on, but yeah, this is a good indication of what's happening. We went further with Japanese inflation. So today we got the Japanese inflation numbers, and those are, well, the headline year-on-year came out at 2.9. The core year-on-year came out at 2.9 as well, as expected, basically. But the main thing is that the actual numbers are on the higher side. So in a way, this is not really good for the new Prime Minister of Japan, Sanae Takaichi, who is in a bit of more in favor of rate cuts, but if inflation continues to rise, and we can see that, yes, it's clearly above BOJ's target of 2%. So if inflation continues to rise, then you need to kind of consider rate hikes. This is not something that Sanae Takaichi wants to do. So okay, look, we'll see how they will balance that. Maybe there will be compromises somewhere. Certainly, without compromises, you cannot have a good deal. But yeah, we'll keep an eye on that. But the fact stays the fact that the Japanese inflation started creeping up a little bit again. So it had a decline here, but it started, it's kind of now curving back to the upside. Initially, we were seeing a fall from 4% in February here all the way to, to this 2.7 last time in September, and now, boom, there we go. We're creeping up. It's not critical, don't get me wrong. Not like, we're not raising alarm bells here yet, but certainly, whenever you have a change in direction, then you have to start worrying just a little bit, So also Japan released its S&P Global Manufacturing Composite and Services PMIs. So the composite is in expansion territory, services also expansion, manufacturing is suffering. It's also below the previous number, not to mention the forecast. So yeah, this is what we were watching. UK's retail sales numbers came out as well, 1.5 for the year-on-year. That's not bad. That's not bad for UK. Certainly not. It's not May, but it's not it's not July here, and but it's still okay. Look, I mean 1.5. I think that's fine. So I'll pick up on the pound, the FTSE in a bit, but what we're watching next is the German HCOB composite manufacturing and services PMIs as well. So at the moment, the only one that is expected to remain in contraction territory is the manufacturing number. But again, we're not far. So services are not far from 50. Composite is not far from 50. Yeah, this is a little bit of a tricky moment here for Europe, and we're going to be getting the Eurozone and the British ones, the Eurozone overall and the British ones as well. So the Eurozone HCOB as well, but the FTSE, the UK ones are going to be the S&P Global as well. So look, again, manufacturing everywhere is struggling. That's for sure. That's probably a tendency that we're seeing, and well, I think that will stay for now like this. Actually, the German manufacturing, let me just, if there is a chart. No, there is no chart. Right, okay, so this is something lagging here. I mean, oops, something went wrong. Yeah, there we go. This is the calendar. Come on. So let's see if it's gonna work again. Right, there we go. So something crashed here on the trading view side, but hey, we don't have a chart. No, we don't. Let's see if we have for the Eurozone. No, we don't. This one here as well. Okay, so we don't really have these numbers here. So right, okay. Anyway, we're keeping a close eye on those figures. Something's crashing here, honestly. Like something's not working very well. Oh well. You know, something, like I said, something is interfering a little bit, I would say. You know, so lately have been getting that. Anyway, so what we're watching next, what we're watching next here, of course, is the main thing today on the economic calendar, the long-awaited US CPIs, and okay, now let's work with those. Look, I mean, I talked about the CPIs yesterday in my video here. I did a separate video on the US CPIs, but I'll give you a little quick kind of tour in terms of what I was saying there, that in a way is going to be an interesting one. Where's that economic calendar? It's going to be an interesting one because we're very close to 3%. Now, I get it, the 3% is not critical, you know, but yes, the Fed's target is 2%. We're now closer to 3. The previous number was at 2.9. Now everybody's like, you know, trying to understand if this is going to, if the number is going to come out above 3 on the headline year-on-year number and the core as well side, this could, of course, strengthen the US dollar. This could just mean that maybe the retailers are, you know, maybe retailers are now kind of struggling to absorb the implications of the tariffs and you know, everything what's coming with it. So all the negativity. Yes, there are positives. Don't get me wrong. The government is taking a lot of money, but it's kind of not really passed on to the consumer. So the retailers, the businesses, the customer-facing businesses are kind of absorbing the you know, the current little increases. So maybe that's why, you know, the consumer is not really feeling that much the heat. Maybe this is a little bit more political because, you know, maybe the businesses have been asked to absorb, you know, like for example, if you don't lift your prices up, you know, in the next kind of year or something, then in this upcoming year, then we'll give you like something like a little tax credit or something, tax break. So maybe, like I said, maybe, and this is, like I said, and this is what maybe could be the case, because I don't see the point, like, you know, for the retailer. Maybe the retailer is afraid that maybe, you know, the consumer is not going to come back. So the winning retailer will be the one that, you know, is able to maybe absorb the, you know, it's basically, you're not going for like maximizing your profit. You're actually going for retaining your customers, and, you know, so attracting them still. Maybe you're going to make your money somewhere else, you know, so, but you just need to keep that flow of people coming into your stores. Again, an idea, this is just, like I said, a thought. So let's see what's going to happen with the inflation numbers. 3.1 is the expected for both headline and core. Let's see if that's going to be the case. For now, I am very careful here. If we do see a higher number, inflation number, then we could see the US dollar continuing to accelerate, because it has been running to the upside this week. And I think that this week is the one where still the US dollar can afford to drift higher. Next week is going to be a little bit more tricky, but yeah, the next week we have central bank data coming through, a lot of it. So yes, keep your eyes on that. Anyway, so yes, in terms of that in terms of the PMI flash ones, I mean, US is also delivering the flash figures. So let's keep an eye on that one. The manufacturing side still remains in expansion territory, but we're being a little bit more on the careful side. Michigan consumer sentiment. Yep. Final. Michigan. This one's going to be an interesting one. So also keep your eyes on that. So again, look, the main focus today will be the CPIs. I think that this is what's going to be driving the market today. So everybody's going to be glued to the screens. But what I said to you in one of my videos recently, and yesterday's video I mentioned that look, it's very difficult to kind of trust the numbers. Look, they're going to be, it seems like they're going to be rushed, you know. It's not only us that the market participants that, you know, then, or like us, you know, people, traders who need the number. It's also the Fed that needs the number. And again, like I said, with all this government shutdown and you know, there's like issues, they cannot agree on stuff. So, and like I said, it seems like it's rushed. And the question is, like I said, you know, is it going to be a correct number? I think that there is a little bit of damage done to with this whole government shutdown. And honestly, like, you know, it's I don't know. For me, it looks like more of a like a, you know, a holiday for them, that, you know, that they kind of decided to create one. So come on, it's like, you know, you don't agree, but you don't agree on things, and that's why you shut down the government. Honestly, I don't know. I mean, it's, to me, this is like, sometimes there are many parliaments, you know, in many politicians around the world in different countries do not agree on things, and they, you know, they debate, but everything continues to work, you know. Like, I mean, you're not really, again, like I said, it's more of a, like, you know, a tool that may be trying to pressure the other side to agree on you. Otherwise, hey, look, I'm gonna, you know, I'm gonna allow this important data to come out, which will kind of damage the economy. So it basically would be on your side, you know, and it's going to be on your end, which sorry, it's going to be on your end, where, you know, you're going to be the guilty one. So that's the way I see it. You know, that's the way this whole government shutdown is kind of used. Anyway, looking at the charts, we are seeing a nice movement here in Nikkei. Honestly, very technical. I like Nikkei. It's amazing to watch this one. Look, we came very close to that, testing that psychological 50,000 zone, but we fell shy by just kind of 55 points or something like that, 54 even. From reaching that psychological 50,000 zone, and we did retrace back down. Then I said to on Wednesday that, look, I'm going to keep an eye on this little hurdle, this 48,600 zone. If we do drop and stay below it, I'm going to lean towards the downside. Did we drop? Yes. Did we stay below it? No. We rebounded. There we go. It's a beautiful example how technical analysis works out here, and we're pushing back up. Now, am I getting bullish here? No. Why? Because I need a clearance of the current all-time high. If we can get that, great, I'll go higher. But if we cannot, well, we could remain range bound until we drop below the 48,600 here. If we do that, then great, that's wonderful. More sellers here could join in. We could see a move lower here, and great, maybe a larger correction back down. But again, for now, I'm not really rushing into things. I'm just observing while we remain in between these two levels. I'm just kind of keeping an eye on the barriers for now. I'm just gonna staying put, you know. Shanghai Composite, there we go, seeing some positivity, and I think this positivity is coming from the fact that the two leaders, the US and China, the two leaders decided to finally agree on when they're going to meet. So that's going to be next week on Thursday, and maybe the market reacting positively to that news. So I'm assuming, because otherwise, again, I don't know why. What else? CPIs? No, no. This one, no. But yeah, let's keep an eye on what's going to happen here. For now, like I said, I'm continuing to aim higher. Because we remained above this downside line I talked about. Let me just show you what I mean here. So this is the downside line. This is the one taken from the highest point of 2007. You remember the financial crash? Yep. Look, there's no similarities at the moment, apart from the fact that there's way too much lending, and lending is and this money is financing stuff which doesn't have a clear like a thing that you can feel that, you know, there's a clear result. There we go. And you know the sector that I'm talking about, probably, you know, the one that's getting inflated very much right now. But long story short, look, for now everything is looking quite positive. That's it, don't get me wrong. It is still a bit of a tricky situation. Why? Because looking at the monthly chart, now on the monthly chart, yes, we're clearing this downside line, we're staying above it right now, we're pushing higher. But if we Next week, for example, suddenly, we start seeing some big selling moments happening in the stock market. This will follow, and if it ends up below this downside line at the end of the month, on at the close of Friday, the 31st of October, then that's going to be very interesting, because then to me that could signal a little bit of a retracement moment, and we could see a move down. Now everybody's talking about, oh, like, I was talking about Christmas rally, and I was talking about, but in certain instruments only, but not like, for example, the US dollar. Yeah, it could be, but in indices, look, the problem is that there's not a lot of buying. Not The retailers are not really piling up too much. Because they don't know what's going to happen. Are there going to be more tariffs, or maybe less? Maybe taco or something like that. So yeah, for now, I would say keep your eyes on this. It's interesting. I'm still leaning towards that psychological 4,000 zone on the Shanghai Composite. But then again, next week will be a big one. Honestly, I think next week is going to be a very big one. So just be a little bit more on the careful side. Dow Jones Industrial Average. We had a great run yesterday. We pushed higher. We ended the day in positive territory. I'm just double checking. Nasdaq was the biggest winner, followed by the S&P and followed by Dow. Well, everything kind of is in line, to be honest. So we did retrace, but what I'm kind of being careful about is this little upside line taken from the low of the 14th of October. So if we clear this upside line, if we break below it, then yes, I'm going to lean a little bit more towards the downside. For now, the upside scenario is the main one, but I need a clearance of this. Not only the current all-time high, which is around here, but also clearance of the first kind of all-time high, the all-time high prior to this one, the 47,000 and kind of 49 zone here, or 50, let's round it up here. So if we do clear the 47,050, then yeah, I'm going to go a little bit more to the upside. For the downside, a drop below this upside line, below the midpoint of this, below the 20-day SMA, then yeah, that could align perfectly with the idea of examining lower levels. The S&P 500, similar story. We're pushing back up. Yesterday, great result here. Pushed nicely to the upside now. 6,764. That's the one that I'm watching. I talked about it, and I said that I'm going to get more comfortable with the upside if we clear this barrier. It seems like we're on the route towards that. For the downside, a break of this upside line is needed, and then yes, we could consider some lower areas. At the moment, I am just observing the price action. I'm watching this little kind of area. I'm not really doing anything, but if we start clearing the current all-time high, then yeah. If we see the CPIs coming out, let's say on the lower side, I mean, this could nicely blow up to the upside here, and yeah. Look, I know it's, like I said, it's a piece of information that's everybody's going to react on, but certainly is it the most trustworthy right now? I somehow have my reservations on that. Anyway, but maybe that's me. So look, we understand that there's one person in the White House that really wants to see lower CPI numbers, because then he can kind of rub it into the face of Mr. Powell, saying like, why are you not doing more cuts? So yeah, but again, if inflation does come out above 3%, Powell has the upper hand, and they'll say, what, okay, we're doing the 2 cuts by the end of this year. I mean, one next week and one in December, and that's it. Then we're data dependent or whatever, because we're seeing inflation picking up. So long story short, for now, it's the moment here that is going to be really decisive today. Everybody's waiting for a piece of data that has been delayed for several times. So yeah, and to be honest, whatever, like, is it trustworthy or not trustworthy, the market will react to it. So basically, we need to position ourselves as well. Nasdaq, very quickly, there we go, pushed back up. We are approaching the current all-time high, which why is it not loading up here? The current all-time high is around here, the 25,183, and yep. This was the, oh wait, no, sorry, 25,195. This was the reached in the beginning of October, and well, it's in any way, in any course, in any kind of, doesn't matter basically. We need a clearance of this in order to go higher. If we don't get that, I will consider a move lower. Now, in general, initially, if you remember, what I said to you, that I'm kind of a little bit more on the bearish side, especially given the fact that we created like something like a pole here. Was like a nice bearish flag, but then we continued rallying. But what's interesting here is that, it kind of looks more like a, like a Z-shaped here, like, something like a Z-shaped moment here, where if we struggle with the current all-time high, it's kind of telling me that there is a chance of a bit of a drift lower, in my opinion. Or ideally, what I would love to see here is, let's say, a strong move to the upside of a violation of this territory, and then a nice good drop lower. And this way, for example, we would end the week with a nice good move here to the upside, but with a false breakout. And this, to me, could be seen as a nice little correction moment. So keep your eyes on that. Again, we are at a very interesting spot. These are the levels that I'm watching here. So like I said, this is the little, I would say, range right now that we have entered on NASDAQ. So let's see which way we're gonna break through. And certainly there is temptation for a short here, but given the fact that we're very close to the breakout point to the upside here, that's why we kind of just take a little bit of a careful approach. Now look, this week we were getting the earnings from major companies, and right now, if you haven't noticed, that we are in the earnings season. Look, this week we had Netflix, right? That was a bit of a bummer and big disappointment. There we go. Look at this, boom, to the downside. Resting now on the 200-day EMA. The question is, can we rebound like all the times here previously? If we cannot, that is opening a can of worms. I think that it's opening the door to some possibility for the short sellers. So keep your eyes on that one. Like I said, we're at a very interesting spot near this 1,100 zone. So if that gets cleared, okay, great for the short sellers. We could see moves lower, but also it could be good for the buyers, because maybe they will say, hey, you know what, I needed the retracement, I want to pile up on this stock because I believe in it, and that's why I'm going to go long it. Maybe if it, let's say, goes back to 1,000 zone, something like that. Look, you do whatever you do. Me personally, I like to see a reversal first, and then kind of maybe consider a move higher. It's not always that you can pick up the perfect trade, like the perfect bottom and the perfect peak. So just be careful, I would say. The most important, have your stop losses in place. So yeah, also, but Coca-Cola, this one did fantastically. Look at this, great results delivered. Yep. So hey, what else? We had RTX, the Raytheon Technologies, former Raytheon Technologies, now RTX Corporation, and yeah, I mean, look, what can I say? War is profitable, right? And we know where the weapons are going, unfortunately. We know, who are they sponsoring, and we know all this. Like I said, war is profitable. That's why sometimes, look, in terms of the markets, I think that I said it before and I'll say it again. This is actually, these are not my words. I can't remember who said that, but I heard it on the news, and I think that it was a perfect piece of information that, that the markets, yes, war is not good. For the markets, war is 50-50. If war spreads out outside of the borders, let's say, where it initiates, then it's not bad. Then it's we can smell a financial crisis. However, if war is contained, then it becomes a positive moment for the market, because there are many companies that get involved. And I mean, we can, of course, we can debate the efficacy of all this, because that's really, I mean, there's no morale in there. There's just no ethics, and but if you're looking from the balance sheet perspective, then yeah, you see positivity. You see these stocks like this, like this one, like Okay, this one maybe a little bit less, but still okay. Lockheed Martin. But yeah, the RTX one certainly is the main one, that sells. But then you have, your other companies, mostly like after the war happens, then you get your companies like this, like Caterpillar. I mean, these are already like rallying, so they're also loving. These stocks are loving disasters, conflicts. Then you have your Deere, John Deere company. Where is that? There we go. That's the one. That's the one. So okay, this is more agriculture, but then yes, it does step in. So looking at the monthly, look at this. I mean, major move here. I mean, oh my God. Anyway, looking at this, like I said, it's quite interesting to see how the market works. The market is a very evil place. We all understand that. It does, help us out with a living, but we all accept the fact that it is not the most ethical, place to be in sometimes. But again, all debatable. The German index DAX today, we're seeing a little bit of a push higher, but then we ticked up. I mean, we're seeing a little bit of a retracement. So long story short, what I'm going to say here is that, look, if we do clear this downside line, or should I say the upper side of the falling channel, then yeah, great, I'll go higher. But because we're not getting that, I'm just gonna continue kind of taking a bit of a cautiously bearish approach, because look, it's a falling channel, right? And the prevailing trend was to the upside, so the greater chance for this one to break out is to the upside. However, while we remain inside the channel, the trend remains, in the direction of the channel, and in this case to the downside. So there we go. That's where, I mean, I'm going to be still a little bit on the careful and cautious side. The FTSE 100 doing well this week, doing really well. Look at this great rebound. What can I say? What can I say? I think that there's more upside here. Look, in terms of economic data this week from UK, we had in some numbers. Let me just refresh my memory on that. Nothing Monday, Tuesday, inflation numbers, that's what we got, right? So inflation numbers were kind of sustained. So core was on the lower side. Headline year on year was kind of the same as previous, lower than the forecast. So in a way, that's also a positive here. PPI output, good number here. PPI output year on year. PPI input, retail prices, retail price index 4.5 against the 4.7. So it's still kind of norm. So I would say everything is holding on. And that's where maybe the positive is kicking in, that it's not that bad. CBI Business Optimism Index. That's not a very good number here. That came out on Thursday. So yeah. But today with car production year number, that's a problem. We know that their Jaguar Land Rover is kind of the main contributor to this number in a way. We can actually even call that, Jaguar Land Rover car production year on year. So, yeah. The GFK consumer confidence, now that came out a little bit better, so also boosting the morale here. But yeah, the car production, no, not really. Retail sales number, 1.5. So wait. Retail sales year on year. So what happened here? Retail price index. I do apologize. Right. Retail sales. Let's have a look once again. Came out better. So great. I mean, that's supporting retail sales excluding fuel. Also great. So in a way, overall, this week we're seeing nice positive numbers from the UK, and certainly they have their own bugs, and like everybody, but it seems like this week at least they're doing nice. Let's jump into the current. Wait. DXY. There we go. Of course, the main culprit, the main kind of story today could be. And like I said, watching the US CPIs. So look, I think that, like I said, I'm kind of leaning towards the upside a little bit on this US CPIs. But I'm gonna, I'm gonna make a quite a bold statement here, and I'm gonna say that I'm ex- I'm guessing it's gonna be above 3%. Again, it's going to be an interesting, maybe like above three, or actually three, or a little bit above 3%. So yeah, that's what I'm going for. If I'm wrong, I'm wrong. It's just, for fun. In general, I would say to everybody, look, if you're trying to, enter a position and try to guess, in order to kind of capture that jump, I would say just be careful, because that, sometimes can backfire. Sometimes spreads, can increase. Volatility can go nuts. So basically, it can take you out if you have a tight stop loss. Might, if you don't allow the trade to walk, and by walking I mean like pushing your stop loss further away from the entry, then you might get caught out. You might get like burned very quickly. But certainly with pushing the stop loss further away from the entry, kind of creates the risk of losing even more, because if you suddenly get a one-way traffic of some sort, then yes, it's not good, and it's not good. It's good. You don't have enough chance to to recover. So just, I always say, better just wait for the number to come out, and then you can do something about it. Anyway, let's jump into the currency world very quickly. AUDUSD, yes, of course, watching this one very carefully. I talked about this. Look, I mentioned several times this week that it's a nice, very nice bearish flag forming here. So we have our pole, we have our kind of consolidation here a little bit. So if you want to look at it as from, not from the bearish flag perspective, but from a range perspective, then I would say the prevailing trend was to the downside. We started moving sideways. So greater chance for this one is to break out lower. For that, we need a stronger US dollar. But absolutely, it can break higher here. If it does break through this downside line, I'm going to lean a little bit more towards the upside. AUDNZD, now this it's becoming a little bit annoying. So what I'm going to do, I'm going to remove everything. And start fresh. So what I'm seeing here right now, yes, we had a great run, we had a great rally to the upside, and we can draw a few upside lines here, just to see if they're gonna matter. Now, if we draw this one, then you'll see that we're further away from this upside line, so maybe a little bit of a retracement is needed. But however, if we do draw this one, then this is a little bit of a better, steeper one here, and we could see more downside here, but the correction side is a little bit, lower, so smaller, and then we could rebound and push back up. But there's another little thing that I'm watching here, and just right now I've started noticing is this little downside line. Now this downside line is taken from the high of the 8th of October, but at the same time we could be seeing another line like this here. So what it means, that it could be forming something of a falling wedge pattern. Now, if this is a falling wedge pattern, then we know that according to all the TA rules, such patterns tend to break to the upside. Now, can we get that breakout? Well, let's wait and see. So, you don't need to kind of guess here, because what could happen here as well, that we could drop very quickly to the downside, maybe test the 50-day EMA, and then the same day we could rebound back up, go back into this formation, and then maybe a day after or a few days after we could end up popping higher. So but this way, you take out a lot of those who are long right now here, have a stop loss here, and yeah, easy, right? Easy. So long story short, just I would say for now, stay a little bit on the careful side. Keep your eyes on this little hurdle, the high of yesterday near the 1.1333. That gets cleared, we could end up aiming for the current highest point of October again near the 1.1445. AUDJPY, our risk on, risk off monitor. We're seeing positivity here. There we go. Look at this. After this speedy decline here we saw last Friday, we are now pushing back up. We're pushing back up, and it seems like everybody's in risk on mode. So why not? Why not? So why not to consider stock market to the upside? So you see, this is the problem. this is where it's conflicting a little bit. On one hand, the certain instruments are indicating that they want to go higher, meaning that CPI, which favors kind of a lower CPI. On the other hand, you have US dollar, which kind of is the opposite. I mean, it shows also positivity, and it kind of supports the higher inflation number. So that's why I keep on saying wait for the number. So you have this balance, and especially before an important economic data set is released. In this case, the long-awaited CPI. So just be careful with this. And sorry, for now, yes, we're watching this AUDUSD to the upside, but again, it can quickly change today. EURUSD very quickly, of course, rebounding beautifully from this downside line from the 100-day EMA, and yeah, now I mean this is doing everything correctly, I would say, but I have to reiterate something that I said in the beginning of this week. That I said that look, we could see a little bit of a drift lower, we could see a drop below this 1.1645, and we could end up testing the downside line, the broken downside line from above. There we go. We tested it. Then I said we could actually, if it holds, we could rebound and see a move back up. We are seeing a move back up, but a more of a corrective move back up. So I would say that I'm not gonna rush into things. To me, this looks a little bit more like a little small bearish flag, with the pole being this on Tuesday's candle. So yeah, again, like I said, I don't want to rush into things. Let's see what's gonna happen with the CPIs, the US CPIs. Obviously, it will affect this pair. So be a little bit more on the careful side. Euro CHF, interesting retracements here, so maybe it could climb back up a little bit, but I'm not really giving too much, I'm not putting too much hopes in here. I'm just aiming for the 0.9267. EUROJPY, an interesting one. This is working like a charm. This is just beautiful. And look at this, it's just rebounding from this territory. I talked about it last week. I said keep your eyes on it. If it holds, if it provides support, we can see a nice push back up towards the 177.91. There we go. You're welcome. Now, this is where the moment is an interesting one, because look, this is what I'm aiming for. And to be honest, given that, it's never the exact level, it's always the area around that level. So look, maybe we could push further north, but what I'm going to do, let's say if you are in profit here, I would take my profit here. You can either take the whole of it and, just kind of, or you can keep a position running, and just, go further, let's say, aim for higher levels. So what I would do is actually I would take all my profits and then maybe enter a very small position. Here, and just kind of go higher. But again, this is me, this is an idea. It might backfire, because again, it might just form something of a range, and what do you do in that case? This is going to start moving against you, and that's it. So that's why there is no kind of clear answer. So we can only, the most important is that when and if you're entering positions, you need to always think about where, if it goes against you, where is the maximum limit where you're still okay, or where you have to liquidate. So that's why, like I said, be careful. And like I said, we're approaching a very key area of resistance. If it breaks, then yes, great, well, we can go higher. But if it doesn't, then it has a real strong moral grounds not to let this pair through. So this resistance area could become quite an interesting one. So keep that in mind. And it's actually an important one. Let me show you what that is. This is the highest point, ladies and gentlemen. This is the highest point of 1991. I mean, we are at these levels. Yeah, it's quite cool. It's quite cool, I would say. EUROGBP, like I said, my love and hate relationship, very toxic relationship with this one. I keep on saying, and I'm gonna, but it's like, it's more like you break up with your girl, you broke up with your ex, and then you still kind of you're still kind of following on social platforms. So that's the relationship here with EUROGBP, and it's currently it's in a squeeze a little bit. You know, it's in a squeeze, and we're waiting for a breakout. So if we get a nice breakout, wonderful. You know, then that doesn't matter which way. I mean, okay, the greater chance for this one is to the upside, but certainly certainly we're being a little bit on the careful side here, because again, you know, the prevailing trend is to the upside before entering this formation, so the greater chance for this one is to break out higher. But I have seen this happening in the opposite direction. Anyway, GBPUSD. GBPUSD, let's jump into that one very quickly. Yeah, similar to EURUSD, did correct lower, did test this this broken upper side of the falling wedge. Now look, this is a good example, and this is why I keep on saying that whenever we have a formation like this, like a, you know, like a falling wedge here, yes, it could break out higher, and it did break out higher. The only thing is what we don't know, like the strength of with which it will, you know, fly high here. So it did move, it did give us a good move here, I would say, you know, something like a how much, like about 50 pips. Yep. No, like a little bit more, actually, more than 50 pips. Let me just do 1.33, actually 100 pips, roughly. Yes, roughly 100 pips. So we got the move, nice move here. Okay, that's great. You know, enjoy the 100 pips, and then boom, it's retracing back down. It does have an opportunity to drift further lower, further down. Especially, look, I talked about this. I said that if we do drop back below the 1.34, I'm leaning towards the you know, lower areas here, maybe even the 200-day EMA. This idea supports the higher US CPI. USDJPY. Oh, actually, USDCAD. Let's not break the you know, the path here. USDCAD. USDCAD pushing higher. I think we're seeing a little bit of a slowdown in oil, and you know, in dollar index is picking up, and the US dollar is picking up because it's CPI day today for, you know, for the US. So, you know, we're expecting a higher number, and that's where, you know, the positivity is kind of kicking in here. So, but again, it's very careful. Overall, we're forming something of a range here. I think that, yeah, this is worth mentioning. So look, for the downside, a drop below the 1.3976, which I just dropped here, then that could open the door to some lower levels. But for now, I'm being very careful. For the upside, a push above the 1.4080 opens the door to some higher areas. This because it confirms a forthcoming higher high. This way, potentially more buyers could join in. So keep that in mind. USDJPY, traveling towards its key area of resistance, the highest point, the current highest point of this month. Near the 153.27. If that gets cleared, great, I'm going to go to the upside. USDCHF, also something that I'm watching very carefully, because it's it is sometimes annoying, but at the same time it's interesting. I don't know, like I cannot describe this, but certainly, yes, it traveled higher. We tested the 50-day EMA, found resistance here, drifted back down, but we're not really going back to the downside here, and we're still holding. It seems like, yeah, I think it's going to be holding like this till we get the US CPI. So keep that in mind. Ladies and gentlemen, let's jump into commodities and gold. I want to jump into the weekly candle. There we go. We're breaking the 1, 2, 3, 4, 5, 6, 7, 8, 9 week rally. We're breaking it finally. So look, we created a new all-time high, you know, this week by the dollar or something, and yeah, look at this beautiful move back down on Tuesday. Fantastic sell-off, major sell-off, then followed by a little sell-off here during the Asian session and on Wednesday. Then we recovered, and now the question is what's going to happen next. I mean, are we going to see a higher CPI number? If it is, then we can expect this one to break lower. At the moment, what's happening? First of all, I want to get rid of this Fibonacci. Look, we went for, actually, before getting rid of it, we went for the 38.2. This week I was kind of saying, look, ideally I would prefer maybe like 50, but even more ideally 61.8. But okay, we went for the 38.2. That's still good. The only thing is that I was kind of hoping, like I said, to see a larger correction back up, but we're holding. So now the question to me is like, has this 38.2 actually, given us something that um, we need to kind of respect? Is this going to be a strong area of resistance? Well, at least so far it looks like that. If we do break above it, I would say yes, I'm going to consider maybe a little bit of a move to the upside. But if we don't, look, we're very close to this upside line taken from the low. Actually, wait, just a second. Let me just adjust this. This is the upside line. There we go. This upside line taken from the low of the 22nd of August. So if we do clear that one, then yeah, there's more sellers there's a little bit more sellers that could join in. It's near the psychological 4,000 zone, so all the stars are aligning perfectly. Let me just draw a Fibonacci retracement, and I think I'm going to draw it from here. It's a rough estimate, so this is where oh, beautiful hold up here. There we go. Look at this, amazing. And that means that the 38.2 becomes a reality. 3,973 could be the case, ladies and gentlemen. So let's see what's going to happen. I don't want to, like I said, I don't want to rush into things, but certainly the 38.2, just slightly below 4,000, is becoming a nice, good target. The 50% is even better. And then we'll take it from there, ladies and gentlemen. So keep your eyes on that. Silver is also at a historic moment because, look, I talked a lot about this and I said to you that we are at a very critical moment, historical moment. This is the third time in history we're seeing something like this parabolic, but is it time now to enter short? Look, I want to allow this monthly candle to settle, just because next week we're having a crazy one with all the interest rate decisions. So just be careful with that. So yeah, it's going to be, like I said, because maybe this week we could see a decline, but then next week, for example, it could recover everything and just, But then the question is, are we going to stay below this upside resistance line? Now I have drawn this upside resistance line, although it's technically a little bit incorrect, but nevertheless, sometimes it works out. So I'm keeping an eye on it. So yes, are we going to stay below this? And this is, like I said, around this, just a little bit below the $51 mark. So if we're going to stay below this, then maybe we could be seeing a nice reversal back down. Platinum, yep, pushing higher, pushing a little bit. This one looks a little bit more positive, to be honest. But again, it's crying. It seems like it's crying for a correction back down. Let's see if that's going to happen. Palladium. Now look, Palladium, I like Palladium. It's an interesting one. I called it out, and I would actually like to see a little bit of a larger correction back down here on Palladium. So let me just actually remove everything here and just have a fresh look. So I'm going to approach this very simplistically. On the monthly chart right now, I am considering a possible, further correction lower, and ideally a test of this 100-day EMA on the, like I said, on the monthly chart. That's roughly around the 1,350 zone, maybe a little bit above that. So, but again, this 1,350, I think that's a good target, and then we'll take it from there. Maybe this is going to be a good floor. Let's see. Copper continues to rise. I talked about this. I said to keep your eyes on this, this idea here, but look, I need a clearance through one of the sides here, either 1,000 zone here on the upside or 950 on the downside, roughly ish. And then yeah, I'm going to consider maybe the next short-term directional move. Cocoa is getting a nice little rebound here. Amazing, wonderful. I talked about this. Look, I mentioned to you in the beginning of this month here, we were testing this area. We're coming closer to this area, this downside support line. And like I said, this is one of those good examples, which technically you should not be drawing this, but hey, it's maybe it's or otherwise maybe you can say, oh, but it's part of a broadening triangle pattern here, well, yeah, whatever we want to think about it. Anyway, the fact stays the fact. We rebounded, so now the question is, can we go back up? Let's see. Sugar. My beloved sugar is holding above that psychological 15 level. I really would like to see this one to the upside, but I would say as long as we continue to trade for a few more days above the 15 level, I might consider actually a push back up. Let's see. If it clears and we stay below the psychological 15 level, then yeah, I'm going to lean towards the downside. Soybeans. Soybeans are pushing higher. Maybe they're loving the whole fact that there's going to be a meeting between the two top leaders, but we're near key resistance, near the 110.38. So if that gets cleared, yeah, this could open the door to some of those higher levels. Let's see, but certainly for now we're being a little bit on the careful side. WTI oil. So yes, we slowed down with the acceleration. It seems like that a little bit today, but yesterday we had a great run. So look, WTI oil, I talked about it. We rebounded from this upside line. Ideally, I was aiming for this territory, but hey, it's never the exact level. It's always the area near that level. So this is what we got. We held nicely above this upside line. We rebounded. I said to you that if we do push back above the $60 mark, there is a chance for a larger correction back up. And at the moment, this is exactly what we're getting. But I'm then going to be very careful with this downside line. The steep tentative downside resistance line taken from the high of the 23rd of June. If that holds, at the same time, it coincides nicely with the 100-day EMA. If it provides good resistance, a nice decline here could be possible like this. Because as I said to you before, I am not very bullish on oil yet. I need this one at least to start pushing back above the 200-day EMA. Brent oil, yep, good result, almost good result here, almost touching this downside line. So let's see if it's going to provide a good resistance together with the 100-day EMA you see here. Natural gas moving away a little bit. So this is what I've mentioned as well, and what I said to you previously, that this is the barrier that I'm watching, 3.58-ish roughly. If that gets cleared, it's opening the door to the towards that psychological 4 level, and yeah, the sky's the limit, right? But at the moment we're getting a little bit of a retracement, but still, if we do continue to trade above these EMAs, then yes, I'm going to continue. Staying positive overall. You know, if we do drop below these EMAs, then a larger correction back down could be possible. Let's jump in, ladies and gentlemen, for dessert. Let's jump into the crypto world, because apparently we're getting some, feedback from the commander-in-chief of the U.S. that he's bullish on Bitcoin. We're seeing a little bit of a jump, right? Okay. Look, this chart is a little bit of a mess, so what I would say is let's get rid of everything and have a fresh look. So what we know so far, that we had a move higher and we found good resistance near this area, near the 126,230. So we created a new all-time high here. Now, also, if we do draw one of these, then you'll see that, hey, it's kind of almost here. So good resistance, upside resistance line. Now, at the same time, is this forming something like this? Now, it's kind of yes and kind of no. So this is a little bit subjective. And to be honest, everything is subjective. Everything is kind of the way we want to see it. So, but in general, so far, this is kind of working here. So we're rebounding, we're pushing back up. And I would say this way, if you're looking for some lower levels, then yes, a drop below this area is needed. And then we can move here lower. But the moment, certainly, yes, of course, we are being very careful, being very cautious. So if we do clear this area right here, the 103,000, 133 zone, look, 103,000, if we do clear that one, more sellers could join in and we could target that psychological 100 level, because I talked about this little Fibonacci retracement here, which coincides perfectly with the with this area, with the 50%. So long story short, actually, you know what? Okay, I'll change that later. Long story short, like I said, for now I'm gonna get a little bit more positive if we do see a push above this barrier right here, this 23.6. And that's roughly around 114,000. If we do push above it, we're above all my EMAs on the daily chart. Yep, could attract more buyers. Bitcoin Cash retracing back up, but look, I talked. That's why I'm being a little bit careful still with the upside, because on other cryptos I'm seeing some like falling channel formations. Now, in overall, this looks bullish in a way, because I said to you that one pattern that I really love is that whenever we see a big decline and then a gradual decline. Oh, excuse me, messages from within. A big decline and then a gradual decline, then this kind of tends to break to the upside here. So, but again, are we done with forming this falling channel? I don't know yet. So if I'll believe it when I'll see it. Ripple, similar story. You can see that we're kind of flirting with this upper side of the falling channel. If that gets cleared, amazing, more buyers could join in. Ethereum is still looking to the downside somewhat. It's still below this, but you see it's forming a little bit of a different story here. It's forming something like this. So yeah, for now it's a tricky moment here, and look, for now I would say if we do get a clearance through one of the sides of this triangle, then yes, then I'll shift my attention to the next directional move. Litecoin, there we go. Now Litecoin is a little bit more positive, so it's breaking already the formation that I talked about. And it's breaking already this, so it's kind of pointing a little bit more towards the upside. It's pointing towards that psychological 100 level. I think it likes it a lot. So let's see if we can travel there, and then we'll take it from there. Dogecoin is also near a key area of resistance, but again, I don't want to rush into things because we're getting the CPIs today. Polkadot, breaking, yep, but it's trying to climb back. It's trying to stay above that psychological 3 level. So far it seems like it's doing that. Let's see if after the CPIs it can remain there. And finally Tron. Tron is the different picture here. Is drifting lower, and it's kind of forming something of a bearish flag here, something like that, or you know. But the thing is that look, it's drifting lower. It could find support near this 0.3080, and actually could rebound back up. So for now, this is working like a charm. I'm still aiming for this territory, but then I'm going to take a very careful approach. Now, why on Tron? Because look, first of all, I like Tron. It acts as more of a currency pair. But what my problem here right now is, let's say, examining further declines. Now, the further declines are supported by the idea of a big drop here, then a range here, and then, you know, the prevailing trend is to the downside. Then, yeah, the greater chance for this one is to break out lower. Also, it's kind of a part of a bearish flag idea. Now, but the upside scenario actually has some grounds here as well, because maybe, just maybe, we could be forming something of an inverted head and shoulders, left shoulder, head, right shoulder. If that's the case, the neckline is here, basically the upper side of that range. And then, yeah, it can open the door to some slightly higher levels, basically aiming for a slightly larger correction to the upside. So yeah, ladies and gentlemen, that is my take this week. Ladies and gentlemen, thank you very much for staying with me for 100 sessions of Markets Talk. I hope you found it useful. I hope I hope you kind of enjoy it, and I hope it helps you in general. I really do. So this is what I'm trying to do: help the viewers, and I hope I'm doing a good job. So thank you very much for everybody, and thank you very much for sticking around with me. And I'll see you on Monday. But yeah, of course, as always, ladies and gentlemen, especially today, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I shall see you next week. Bye for now.